Okay, people, this is Joe DiChara bringing you another segment of the 5-day business challenge. This one is a little bit different because it's going to be recorded. And unfortunately, Facebook Live was not talking to Zoom today, everything I tried. So we're going to do this on a recording. I'm going to post it up on the Facebook page. And just like before, if you have any questions or comments, just post it in the chat and I will get back to you. If you want to set up a time to chat with me about this content or anything else that has to do with your business, feel free to go to timewithjoe.com and you could pick out whatever day and time works for you. And I put myself out there because I love entrepreneurs. I love helping people start, build, and manage a small business. And that's my story. I'm sticking with it. And today, we are on the A part of my MAP system. Now, MAP stands for Marketing, Administration, and Production. And those three core segments are in every single business. I don't care if you're Apple, computer, or a candy store. You have to produce something that can be sold. And so that's production. You have to sell it, which is marketing, and then you have to keep track of everything, which is administration. And that it's as simple as that. And let me take a second to take you down the entrepreneurial journey. What happens when somebody actually starts a business? And this is something that nobody has ever asked me, and I'm mystified by it because nobody ever asked me, when does the business actually start? When do I start taking write-offs? And most people believe that the business starts when they start making money. And that is so far from the truth, because if people only know the tax write-offs and the amount of benefits that they could get by setting up their business correctly from the start, they might look at it a little bit differently. Now, the A part of business is the part that nobody really likes. And I understand that. If you like numbers, if you like looking at financial statements and compiling numbers, then you should be an accountant. And most business owners aren't accountants. It's as simple as that. So the fact is that when we start a business, we have an idea, we have something to produce, we put it out there, we sell it, and that's where it ends, because most people don't take the next step to legitimize their business. And most people don't realize that they're actually in business. They might know that they're trying to make money and they're putting themselves out there, but it might not be serious enough yet. But let me tell you, the minute you start a business, it is serious, whether you like it or not. Because once you start a business, there's a lot of people that want to know about it. And in today's economy, with today's technology, a lot of people know it, whether you know it or not. Let's face it, today they know everywhere you go. They know who you're talking to. They know what's on your website, what you're doing in social media. And guess what? They know about all of your business transactions. It's electronic now, folks. There is no more cash. Even if you own a bodega, you're taking electronic payments. There's very little cash now. And this is starting to ripple through the small business community like a wildfire. You know, the government is hitting us from left and right. And they're not hitting the big companies because the big companies see this stuff coming. They're prepared for it. What they're doing is blindsiding small business owners, sole proprietors, solopreneurs, because they know that we are not prepared. On a whole, there are 25 million sole proprietors out there that at least 20 million of them, I estimate, should be s-corps. So if you're going to be in business, you need to buckle down and treat this seriously. And whether you like the administration and the accounting and the bookkeeping part of it is irrelevant, because you have to take care of it regardless. Now, most people would like to spend their time on marketing. And I understand that, because I love marketing. I love when people write me a check. I love when I can do a service and people get value and they pay me for it. And hopefully I've given them more value actually than what they've given me in cash dollars. And that's something that I learned from the science of getting rich. And from other people like Larry Brott and Craig Duswell, people that always said over deliver. That's another thing they didn't teach me in accounting school. They never said what the value of over delivering was. And that's what I want to do for you here. If you haven't noticed, I am trying to over deliver. I'm giving you all of as much of the content and knowledge and experience that I have over 35 years in a little condensed format. So I want you to know, everything I'm going through here is really, it's important, but it's the surface stuff. It's the stuff that if you don't dig deep into this, it's only going to take you so far. Your business will only take you so far. I'm in business for over 30 years, technically, as an accountant. And I am still figuring things out. I'm still digging deeper and deeper. And I'll never get to the bottom. Never get to the bottom. Nobody ever gets to the bottom, because things keep changing. Business keeps changing. People come and go. New technologies come up. New ideas. We're in an exciting period of time. And I said this yesterday. Benjamin Franklin's biggest regret was that he was born too early. Benjamin Franklin, probably maybe the greatest entrepreneur that ever lived, knew what was coming. He saw what was down the road. So this is the time to take advantage of this instead of being taken advantage of, because that's what we've been doing. That's what we've been accepting. Small business owners are not banded together. Even though there's over 25 million of us, we're a loosely knit set of people, unfortunately. There are organizations out there like the National Association for Small Business Owners, which I never even heard about until a couple of months ago. And what they do is commendable, but it ain't enough. It ain't enough, obviously. Because if they have the kind of membership that they have, they should be telling their members that it's not okay to be a sole proprietor, and they're not. Nobody is. And I'm done trying to figure out why. I decided that I'm just going to start telling people that it is not okay to do business as a sole proprietor. So today, whether you like it or not, I'm going to take you through what it means to set up your business legally and start formally being a business. See, if you're not doing this leg, the administration, you're an amateur. You're not a professional business owner, and you're going to get yourself into trouble eventually. And by trouble, I don't mean you're going to get audited by the IRS, or it's going to, you're going to wind up in jail. When I say trouble, I mean you're losing money without realizing it. You're wasting time and money. And I don't care if you got a little part-time thing on the side, it's still your time and your money. And my job is to show you how to maximize that. Minimize your time, which we're going to go over tomorrow. I'm going to go over some time management stuff, and maximize your profits. That's what my job is, to show you how to do that. If you don't do it, then it's on you. So I just want to mention, I put on the page today, Testimonial Thursdays. Give a shout out to people, unsolicited testimonials for people that are really helping you. And I just hooked up with a gentleman that is a giant in the business world, and I've known him for a long time. And just by coincidence, I've known him for so long, and it dawned on me that, hey, Larry Broughton might be able to help me. So I hooked up with him and his cohort, Dave Braun, for a 45-minute chat on what I'm doing. And, they dug deep in just a short period of time. And I came out of that with a whole new focus. It's amazing when you think that you have clarity and focus, and then somebody takes you and questions you and makes you dig even deeper. So I want to give a shout out to Larry Broughton and Dave Braun for stepping up. These guys don't have to do what they're doing. Larry has been out there helping small business owners for years. And Mr. Broughton owns Broughton Hotels, and you can look him up. He's a giant in that industry. But the way that Larry and Dave give back, and I know that they charge money for the mastermind and everything, it's a business, but Larry and Dave put themselves out there to help a little guy like me. And I'm a little guy, I'm a solopreneur. They didn't have to spend, I got two world-class entrepreneurs coaching me at the same time for a ridiculously low price. I can't even tell you how much it was because Larry might get mad at me. But, it was well worth it. And I bring Larry up because, Larry's one of the people that said, you're gonna fail. He said it for years, and it used to get me angry, to be honest with you, because I thought Larry was discouraging people from going into business, because who wants to go in business knowing that they're going to fail? And it turned out that this is exactly what I'm telling people now. So Larry was right. The truth is that most small businesses fail. The tenacious entrepreneur brushes himself off and moves forward. So now I've learned the concept of failing fast. I never understood that. So what you want to do is you want to try your business out, because it ain't going to work, but you want to try it with as minimum time and effort and money as possible, and then you find out what's wrong with it, and you tweak it. And that's the business process. So what happens is, and the reason why Larry said that, what I believe, is to make people aware of how hard it is to go into business and stay in business and actually turn a profit. And so the moral of the story is, yeah, you're going to fail. And that's where the pain comes in. And there's no way around it. You can eliminate the suffering, because the suffering is the stuff we put ourselves through. It's one thing to know that something's going to be painful, but it's another thing to get blindsided by it. And that's what causes the suffering. So let's get into today's lesson, which is all about formally setting up your business to account for your production and your marketing, because they are all tied together. So let me see if this PowerPoint works. So the first thing is setting up your business. And like I said, one of the first, most important questions that should have been asked of me with the new business owners. When does the business actually start? And how does anybody know that I started it? Because what happens, people, is when you get the idea, and I keep going through this, you get the idea to start something. An idea without action is just an idea. It hasn't manifested. It's nothing. The minute you take action, you are in business. And what that means, like I said yesterday, once you are in business, you're entitled to start taking tax deductions. And that's the first place that people fall off because they don't realize the enormous tax benefits that they could be passing by. Even if you don't have any income now, there are ways to capture those expenses in a corporation and carry them forward indefinitely. So sometimes you start a business, you spend money, and you never generate revenue. Well, I have a strategy that I could show you that you could capture those expenses and you could use them 5 years, 10 years down the road. Why give up a potential benefit? Well, the reason is because nobody knows about this. And most accountants don't talk about this stuff. I've never heard an accountant talk about this. Now, for me, it is common sense. It's common sense because I've been doing this for so long. Now, once you start your business, at some point, you need to think about your legal structure. And this is the next point where people fall off. I keep saying there's 25 million sole proprietors out there, which is absolutely the worst way to do business. The worst way to do business. So what happens at that point when you got to make a decision? People are not making a decision. They're doing nothing. And nothing is what gets people in trouble. Nothing is what gets people audited. Doing nothing is what contributes to your failure. I mentioned in the beginning, I believe that the new business failure rate is over 98%. I've started probably 30 different businesses in my life, and right now I have 2. Do the math. All of those businesses, a couple of them I sold. Most of them I never made a penny. Some of them I made money but took losses. But those figures don't show up on the SBA website. It's all smoke and mirrors they're giving us, folks. We are not being counted in the government statistics. Whether you believe it or not, I could prove it to you. I can do a whole week and show you charts, facts, and figures, but their numbers do not add up. On their website, they say that 50% of business owners fail in the first 5 years. There is no way that that is possible. No way. Because if you do the numbers, if only 50% failed every 5 years, we probably have about 80 million businesses now, and we don't. We have 30 million. So at that point, which should be right at the beginning, but it's not, at some point you got to decide on what kind of legal structure do you want. And now this is another thing that mystifies me because there's only a couple to choose from. And most of them are not attractive. So I already said you got your sole proprietor, and then you have a partnership, which is really a sole proprietorship with more than one person. And partnerships are bad also for other reasons. And I can't get into that either. So sole proprietor and partnership are not good. You have a corporation and an s-corp, which are An S-corp is a corporation that just has elected to be taxed as a small business. So you can be a corporation or you can be an LLC. The most misused type of entity in existence. LLCs were not meant for business, for operating business entities. LLCs were created for investors of passive activities like real estate, oil wells, mining, that sort of stuff. So when I hear that somebody is an LLC, they become a client, I turn them into either a corporation or an S-corp. 98% of the time, 95% of the time, it's going to be an S-corp. But the decision between an S-corp or a C-corp has to do with the individual's current tax situation. So nothing's written in stone. The only thing that's written in stone, as far as I'm concerned, is the need to incorporate, and incorporate as soon as possible. Now, the question is how, where, when. Forget about why, I just told you why, but where. And the issue here is another thing that drives me crazy, because it's a no-brainer, people. You need to be organized in the state and location you are doing business in. Now, just because you have an internet business doesn't mean that you're doing business. You're physically, if you're in California, when you're conducting your business, you need to be registered in California. And that's simple enough. Wherever you are doing business is where you need to be registered. Now, people get confused with this issue about incorporating in these states that have no income tax: Delaware, Nevada, Texas, Florida, and that's fine if you're going to be a big corporation doing business in multiple states. And what I mean is having a physical presence in multiple states. And the reason is that because in Delaware, they have the most sophisticated business law division in the country. It's the oldest. They have the most case law. And it's very attractive for big companies like Facebook to be organized in Delaware. If there is ever a shareholder lawsuit, it will be tried in the state they are organized in. And that's why people organize in Delaware and Nevada and Texas. Actually, those states are for different reasons, because it's easy to incorporate and they have no state income tax. But unless you live in those states, you should not be organized in those states. So I'll give you a couple of real life examples that I just went through. I had a large company, a Polish company, that set up a satellite office in the United States, and they organized in Delaware, not knowing what I just said. Well, they opened up an office in Manhattan, and they did everything right as far as setting up their payroll and everything. That they got insurance, and they asked me to help them with their payroll taxes. So I started asking questions, and it turns out that they are not legally registered in New York State. And what my client thought was, well, if I'm legal with all the taxes and everything, then I should be legal. But the truth is that the tax department and the Secretary of State are two different divisions. And the tax department obviously doesn't care if you're authorized to do business, because I think they just want the money. But at some point, this would have reared its ugly head in New York State, probably when they filed their tax return, because New York State would come back to them and say, hey, you're not authorized to do business here. You need to clean this up. Another individual, now this is a large company with a lot of resources. They had attorneys, they asked the right questions, but for some reason, people did not give them the right answer. So now they're incorporated in Delaware, and now we got to register them in New York State. What does that mean? We still got to pay New York State the same fees, and now we have to deal with Delaware every year. It's a waste of time and money. Another individual came to me, and she went to one of these online incorporation services, and she asked all the right questions, and guess what? They incorporated her in Delaware. First of all, they made her an LLC, which is wrong, and they did it in Delaware. I had to fix that. So the point is, people, if you're gonna go into business, you need to be a corporation. You need to be incorporated in the state that you're sitting in. Okay, some of the issues that come up, I said, how do you incorporate? I have a whole course on how you can incorporate yourself, and I'm going to offer that to you tomorrow at the end of the challenge. And then I'm also going to offer you some additional bonus sessions. Okay, so this ain't going to end tomorrow, and in fact, for you, it's never going to end. But some of the things that I've seen people get caught up in is the name. They don't know what a registered agent is and an incorporator. So I'm going to explain that I can't say it's unimportant, but your name, your corporate name is different than your branding name, if that makes sense. So you could be XYZ Corp, but you could use a fictitious name. And what I mean by that, let me explain. I had a client owned 3 big restaurants in Manhattan, all different names, all different bank accounts, under one corporation. So people get hung up on trying to figure out the name. And you don't have to, because you're not married to a name. You can always change the name legally, or you can just get a certificate of this. All the states are different. Some states call it an assumed name, some call it a fictitious name. But the name should not hold you up. And I'll tell you what the problem with procrastination is. When I said that when you start a business, you already start having tax deductions. The longer you procrastinate, the more deductions you're going to be missing out on. It's hard to go back. It's easy when you structure your business correctly to start capturing those expenses, because there is a thing called time that the government looks at. So you can't go back. When you set up a corporation, you can't go back to the transactions you had before, and only in limited circumstances. So don't procrastinate on this. Now, when people incorporate, and I see this with the online incorporation services, every corporation needs what they call a registered agent. Now, the registered agent is an individual or a corporation, another legal entity, that will be served for any legal action against the corporation. Now, here's the thing. The registered agent can be anybody. And if you're a small business, a solopreneur, it should be you, because they charge to be registered agents. Now, the likelihood that you're going to get sued are slim to none, to be honest with you, because in 35 years in practice, I have seen maybe 1 or 2 businesses served. Now, if you've gotten sued, unfortunately, you might think different. So the registered agent, if you're paying 125, 140, whatever they charge every year, you're paying for them to provide a service that never even happens. That is what I call a scam. This is where the business community really has no respect for solopreneurs, sole proprietors, And they slip little things like that through the cracks. So you could be your own registered agent. Now, the incorporator is whoever is incorporating, filling out the actual paperwork to submit to the state. I incorporate people, so I am the incorporator. It's as simple as that. Now, if you want to know, and you should know, who is policing you, it's the Secretary of State. When you set up a corporation, it's not the tax department, it's the Secretary of State. And every Secretary of State has a massive, massive website with massive amounts of content. And believe it or not, they are all organized pretty well. You got to know what to look for. So, you could peruse the Secretary of State sites, figure out what you want to see, or you could just chat with me for free for a couple, 10, 15, 20 minutes, and I will walk you through where I go to incorporate people. It's not brain surgery. It's daunting for people that never have done it. But once you see really how simple it is, you might start scratching your head like I have been for a long time. Next, books and records. Okay, this mysterious term, when you get audited, the letter says, you are commanded to bring your books and records to whoever is asking for them. And this is where people's eyes glaze over, because who knows what books and records are? Not too many people. But I'll explain it to you very simply. Your books and records are everything that tells the story of your business. Everything. Starting with your articles of incorporation, your corporate minutes, if you have any, leases, contracts, anything, any document that proves the validity of your transactions and matches those transactions have to be summarized in a manner to allow the preparation of an accurate tax return. And that's what happens. So I've been talking about the systems, the science of small business, and how I can break that down for you is this. The filing of a tax return, and I've said this, is an administrative process whereby you are reporting to the government a summary of all of your transactions. Now, you need a summary, you need this information to run your business. Not so much to answer to the government. That's important because they're policing us. But you need accurate information to make decisions about your business. And that starts, well, let me just take you to the next slide, which is, the end result, and I'm going to show you these and make it as simple as possible for you, are your financial reports and tax returns. And the main pieces, the main documents that I'm going to show you how to look at, because you don't have to become a bookkeeper and accountant to do this stuff. But if you're a business owner, you need to know this stuff. And it's really pretty simple. There's a balance sheet, a P&L, income statement, and a business tax return. That's the product that I produce to present to the government once a year. Now, how do I compile this? How does an accountant compile their transactions? And you need to know this, because if you don't know this, you're not going to know when there's an issue in your business. You're not going to know, when there's a gap in your process. I'm going to give you another real life example, because all of your transactions need to be reported, not some of them. That's what gets people in jail. You can't have two bank accounts, one you tell the IRS about and the other one you don't, which is something I caught one of my clients doing. I fired him. I got rid of him once I realized what he was doing. And just by no coincidence, it's a sad story. The guy was, being investigated by the FBI because he was actually running a massive Bernie Madoff type scam. Okay, the guy actually wound up committing suicide. Uh, Terrible, terrible story, but this is what happens. He thought he was getting over, and he wasn't. The story that I wanted to tell you about was a pretty successful entrepreneur, had this business, and some of it had to do with doing transactions through PayPal. He forgot to tell me about the PayPal transactions, and I uncovered it doing my accounting work. And his explanation was that he didn't think it was important. Now, he didn't have a couple of $1,000s. He had hundreds of thousands of dollars of revenue going through this account. I found it pretty hard to believe that he didn't think it was important, but that's the kind of thing that gets people in trouble. So your books and records, what exactly are they? Yeah, they're the documents, the legal documents that back up all of your what's going on in your business. But what does a bookkeeper do? How does an accountant come up with these numbers? And what I do is break every transaction down to its lowest common denominator, make it simple. You could have millions of transactions, but I guarantee you that they all fall into a certain set of processes. And there's only a couple of types of transactions. There's sales, there's paying your bills, there's depositing money. There's only 7 or 8 different types of transactions that can happen. So scientifically, we can categorize everything and make it into a system. So I don't care if you're doing 10 transactions a month or 1,000, it's gonna be the same process. And it starts like this. Every business transaction starts with an agreement. There's some kind of an agreement that we're gonna do business. There's an exchange of goods and services for money. That's what I call the handshake. Now you have the transaction. That's where does this actually take place? Is it on the internet? Is it through a shopping cart? But something happens that triggers the exchange of money. That's what has to be captured. And the way we capture it through your bookkeeping system is what a bookkeeper does is they compile all of your transactions, the individual transactions. And then they do something that we call a reconciliation. And we reconcile banks and credit cards. And in today's world, you got all kinds of other types of accounts. You got PayPal accounts, Amazon accounts. PayPal I treat as a checking account because some people actually collect money in PayPal and they pay their expenses. That's what this other guy was doing. It's like having a bank account. Those transactions have to be accounted for. What's overwhelming for people, and I understand this, is that when there's a lot of transactions, it can get confusing. And most people don't like numbers. But if you know what the flow is, if you open up another bank account or another PayPal account, you should know that your bookkeeper and accountant needs to know this information. Because if you have me as an accountant, I'm gonna find out. I'm gonna find out. People cannot keep many secrets from me when it has to do with their business. And my job isn't to find out if you're lying about something. My job is to find out if we're accounting for everything. So once we get the the notice, the information that a transaction has happened, and the way we get that, it's not like somebody's ringing a bell every time there's a transaction. The notice can come from a transaction through your bank account. You know, everything is electronic now. So a lot of bookkeeping that we do is we're just sucking the information out of the bank account. And there's only so many pieces of information we need. The date, the amount, those are obvious. Who's getting paid? What is it for? And that's it. That is it. It's not that complicated. Now, what we do, what the bookkeeper does, is they take that information and puts it in your accounting system so it can be accounted for. Now, just putting it in the system isn't enough because it's got to be verified. And that's what a reconciliation does. I have seen thousands of businesses, even businesses that had an accountant, that never reconciled their accounts. Let me tell you what happens during an audit. The IRS doesn't care what you have on your books. They care what goes through your bank accounts and your PayPal accounts and your credit card statements, because those are verified transactions. Now, if you haven't accounted for them in your bookkeeping, that's where people get into trouble. That's where the IRS starts digging deeper, because your books do not match your tax returns. It's as simple as that. What goes on your tax return is a presentation of what transpired. After the bookkeeper does their work, now the bookkeeper can be you, it could be me, but somebody has to be compiling those transactions. You should not be your own accountant, if I haven't made that clear. You get that information to the accountant. Somebody like me goes through the books, and now this is what an accountant does. The accountant takes the bookkeeping, verifies the transactions, makes sure that everything is in the right categories and everything's been accounted for. We might make some what we call adjusting entries for things like interest and depreciation. And this is stuff that non-accountants cannot do. And in the end, what the accountant comes up with is what we call a trial balance. You don't even need to know that, but from the trial balance is where we derive the balance sheet, the income statement, and finally the tax return. So just be aware that the tax return is only a presentation to give to the government. What's really important are the numbers that are on your balance sheet and income statement, that they are accurate so that people like me, your advisors, can give you the right advice. All of my clients' books are in real time. I don't have to guess in March about how much money they owe in taxes. And if you're a client of mine and you're listening to this, you know this, because in October and November, I'm hounding you for up-to-date information so that I can advise you on what your taxes are going to be for that year. See, most people think they're doing the tax planning when they go to their account. That's not tax planning. That's not tax planning. Planning is seeing where you are now to make a decision on what you want to do for the future. Now, what is a balance sheet? A balance sheet, very simply put, it's three sections. What you own, those are your assets. What you owe, things like credit cards, loans. And the difference is what you're worth, what that business is worth up to that day. In other words, the equity that's still in the business, equity that you haven't taken out, is the result of everything that business has done up until that point. Now, a balance sheet is for a specific date. So it's a snapshot in time of where you stand. Now, this information becomes extremely important in planning your business, because what I do is I'll compare balance sheets from one year to the next. And the other important, not important, integral report is your P&L. So every transaction, believe it or not, every time there's a transaction, your balance sheet and your P&L change. And a P&L is comprised of your revenue minus your expenses. So what I want to show you here, people, is the categories, because in accounting and bookkeeping, what we're doing is we're categorizing all of your transactions. Now, most of your transactions we can get from your accounts, which is the easiest way to do it. But as sole proprietors, as solopreneurs, it's not always practical to do that. So we might have to actually take transactions that are outside of the business and document it and get it into your financial reports. Now, an income statement becomes valuable for me and my client, because when I could put a profit and loss statement side by side, comparing it with what happened last year to what happened with this year, I can see the trends. And that's what accounting is. And without accounting, unfortunately, people, you are at a disadvantage. The next slide is just about the different types of tax returns. You know, every type of entity has a different type of tax return, except for an LLC, which I covered in the beginning. So the confusion comes with the LLC picking as a legal entity. You know, a lot of people choose LLCs for the wrong reasons. And the IRS, the way the IRS treats the LLC is they don't exist. There is no tax form for an LLC. So you get what they call the default classification. So when you become an LLC, they classify you automatically as a sole proprietor for tax purposes. So you're getting the legal protection, the legal shield from an LLC, but you're not getting any tax protection. You're not getting any tax benefits. So the forms for sole proprietor goes on your personal income tax return. It's tied to your personal return. A partnership has a form 1065, and corporations are either a form 1120 or 1120S. Not important information for you, but it's good to know what tax return you are filing on. Now, this next slide is meant to actually scare you a little, because I want you to understand everybody thinks it's the IRS. It's not the IRS. Believe it or not, the IRS is probably the least of our problems. Yeah, they audit us. They're the government's policemen. But if you follow my direction, you're not going to get audited. And even if you do, you're not going to owe them any money, because we put all of our We dotted all our I's, crossed all our T's, and we gave them what they want. See, the IRS, the people that work at the IRS for the most part are good people. They're not evil people trying to hurt us. They have a job to do. And once you realize that, once you can accept that, all of your fear and anxiety of the IRS should go away. It's a simple process. The process is simple. The system is complicated. And this is another thing that makes the system so damn complicated. So we have the IRS here at the top, and their jurisdiction is basically income, payroll, estate taxes, stuff like that, only at the federal level. Then you got to deal with the Social Security Administration. So if you're an employer and your payroll records don't match up, you're going to have to deal with the Social Security Administration. They are not the IRS, but they talk to the IRS. And with technology now, people, everything is automatic. Homeland Security, who the heck, since 9/11, we got this Homeland Security. What do they have to do with taxes? Absolutely nothing. But when you hire somebody, you got to fill out what they call an I-9. They're asking for all kinds of documentation, Social Security cards, driver's license. They have nothing to do with the IRS. So why are they wrapping their arms around our payroll process? So that they want to see who the heck we're hiring. And if we're hiring people that they're not comfortable with, they're going to show up. And that happened to one of my clients. They paid an unannounced visit to my client who had about 25, 30 employees. Thankfully, my client followed my direction, and they had a folder for every employee with all of the documents. Homeland Security asked for those documents. They went through them, and everything was in order. They said, "Have a nice day," and they left. So you're worried about the IRS, but there's other people that are out there that you need to be cognizant of. The US Department of Labor is not the IRS. What they do is they make sure that your employees are covered. They make sure that the employment laws are being followed. That's not the IRS, people. Secretary of States, now we get into the state part of this. If you don't run your business correctly, if you don't report to the state on whatever they are asking for, and every state is different. In New York State, we have something called the biannual statement. Every 2 years, we're supposed to report any changes in corporate directors, address, and whatever. And we get to pay a $9 fee with that. Why do they need that? I have absolutely no idea, but they do. California has something called a statement of information. So just incorporating in California isn't enough. And guess what? You got to pay a $25 fee for the statement of information. And that just lists who the officers and directors are of the company. If you ask me, this could be done when you incorporate. So, there's other people involved. State sales taxes. I mentioned this yesterday, I think, or the day before. Sales tax is the most complicated tax that there is. It is virtually impossible to stay in compliance with them if you're a contractor, if you're doing business in multiple states. It's not simple. And I can go through some of the archaic, ridiculous rules. Like if you're in the advertising business or you bought some kind of promotional material to market your business, those things used to not be taxable. So the person selling them didn't have to collect tax on that. I don't even know if that law is still in existence, but I happen to have a client at the time that was in the printing business. So when he printed cards and stuff like that, it was not, it was taxable. But this whole other segment of his business where it was not taxable. So sales tax, and okay, so I told the story the other day about how sales tax can get you in trouble, because if you don't know if you're supposed to be collecting sales tax and you don't, you are liable for paying that. And I had a client that went out of business because of this. They were in the awning business. They put awnings on buildings, and with the capital improvement, there is no sales tax. It's built into the price. The the provider does not collect sales tax from their client. And that's what they did. They, all of their awnings, they considered capital improvements and they didn't collect sales tax. Well, they got audited and the state correctly said that you should have been collecting sales tax. And they hit them with a $200,000 bill plus interest and penalties. Now they can't go back to their clients. I don't even know if it, maybe they can. I don't even know if it's legal to try to collect that money, but you try to collect money from somebody that you sold something to, 3 or 4 years ago. So you got to be cognizant of sales tax. State departments of labor are all over businesses now, especially in the state of California, where they have this ridiculous rule where they are reclassifying independent contractors into employees. Now, what that does is it creates a whole avalanche of problems. And there's a whole slew of other agencies. I'm putting family courts. Now as an accountant, when somebody has an employee and they get a wage garnishment, that has to go through the accounting department. And again, if the employer doesn't withhold the wages, the garnishment, and it could be from a civil suit, it could be child support, it could be anything. But if you don't follow the compliance rules, guess what? You're going to have to pay whatever you should have withheld from your employee. So that's enough with the government scare tactics. Now let me go through a couple of issues that people get in trouble with. And the first one is the commingling issue. And this is rampant because when somebody starts a business, small business, it's hard to separate your personal transactions from your business. But it is essential for a lot of reasons. Number one, if you get audited and you got personal expenses going through your business, that's going to raise red flags. Even if you're not taking them as deductions, even if you're taking your hair salon as a distribution of profits, there's a question of why are you paying for your personal expenses through your corporation? The right way to do it is to give yourself a distribution check out of the corporation and then pay those personal expenses out of your personal bank account. You keep them separate. That is important. Now, you might have some transactions that are both personal and business, like the use of your car. And the way we deal with that is we do what I showed you before, is an accounting adjustment. We account for this stuff. Another thing that people are getting into a lot of trouble now with is payroll compliance. When I say payroll compliance, I'm talking about the regular things that you got to be aware of just when you pay even a part-time employee. It is crazy, people, because the government, the IRS, they have made the business owner and people like me the unpaid police force. When you start a business, when you hire somebody, when you sign off, and you should look at when you're signing your name because it says under penalties of perjury, you are taking on the responsibility of knowing what you're supposed to do. And this is why I tell people you got to do your business with intention. You can't go through it with your head in the sand. Independent contractors, like I said, this is huge because there's a lot of dollars at stake. The IRS always viewed independent contractors as a problem because it was hard to police them. Now, because of technology and a change in a few laws and questions on our tax returns, it's become a lot easier for them to identify who is paying subcontractors. And then what they're doing is they're going into businesses and saying, these people were not subcontractors, they were employees. And now you got to pay all the back taxes. You got to issue these people a W-2. You got to redo all your tax returns, and it's a nightmare. Now, what's happening is in the business world, in places like California, people have stopped hiring independent contractors because they don't want that potential liability down the road. How would you like to hire somebody and then find out 2 years later that you owe another 25% on top of whatever you paid them? Insurance, another area that gets overlooked because, again, when you hire somebody, you're required to provide workers' comp insurance and disability. And if you don't have that, and it's very easy to overlook that, because if you're going to a payroll company, they're not telling you to get workers' comp. They might offer it to you because that's what they do now. They make money on that, but they're not telling you that you have to. Some of them might give you the information saying what these are the next steps, but it's easy to overlook and forget about it. And I've spent years writing penalty abatement letters for clients, and I probably saved them hundreds of thousands of dollars. But think about the anxiety that you would get if you get a bill from Workers' Comp Board for $20,000 and you don't know what the heck it is or if you're going to have to pay it. And these are some of the problems that I can solve that are avoidable. Signage, now it's a big thing to have the right signs because, and I could tell you in New York State, what they started to do is actually go into these little convenience stores, beauty salons, nail salons, and they would go in there and number one, ask for all the payroll records, but also see if you had all of the Department of Labor required notices posted in your business. Things that you get for free, like when you get your workers' comp certificate, it comes with a poster that you're required to display in your business. Your sales tax registration is supposed to be posted in your business. There's all kinds of payroll notices that have to be up there. In New York City, they passed a law that you had to put a sexual harassment notice up on display in your office where your employees can see it. If you have people that speak another language, Spanish, Korean, you need to put all this stuff in their language. This is insane, people, but this is what it's come down to. Licenses and audits, another thing that is mystifying to me, because not only do you have to register with the IRS and the state and the local governments for what you're doing on your taxes and your payroll and all of this stuff, but you might have to get additional licenses to do your business legally. So this is another thing that I offer when I incorporate people. It's, listen, we got to do an extensive search to see what you're doing. And if in today's world, today, because these laws are changing all the time, we have to see what you're required to have. I'm going to give you another true story. I had a client, a potential client, come to me about 3 years ago, and he wanted to do shrink wrapping. If you don't know what shrink wrapping is, it's when you get, the the big barbecues, all the lawn furniture and stuff, and you want to preserve it during the winter, you wrap it up in plastic. And that is a business. It turned out that that business in the county he was doing business in required him to have a contractor's license. And to get a contractor's license in Nassau County meant that he needed to have something like 5 years experience as a contractor. And you needed to prove that by showing that you had a W-2 or a 1099. Now in Suffolk County, which is the next county over, the requirements are totally different. He could have gotten a contractor's license very easily by paying a $100 fee, and then he could have done all of his business in Suffolk. The problem is all of his contacts were in Nassau. So that was a business that actually didn't happen. And that's it for today, folks. There's audits. I want to share this with you. If you followed this course, we should be fine. And that's it. Joe DeChara, if you want to chat with me, go to timewithjoe.com. Thank you for listening. Have a good day. I will see you tomorrow. Thank you.